Hey, what's up everybody? It's Austin. It is Monday. Got a big update. Our portfolio is now in the green overall. If you've been tracking this portfolio, you're going to be excited to see that we have recovered all of our losses and we are now in the green. We're also talking about Palantir. They just released earnings this morning. The stock is down. Last I looked, it was down 12 or 15% or something. I'm going to review those earnings and try to give a non-biased view or an unbiased view on my reaction to the earnings and if I'm considering the stock as a buy right now. Here is the portfolio. I talk about this in a lot of videos. There's a whole playlist of $10K to $1 million portfolio if you want to follow the journey. But I'm building a $1 million portfolio right here transparently on YouTube and sharing my positions, the performance every step of the way to try to provide some transparency behind investing and how I manage this portfolio. So it's currently at $87,400. We are now up $2,700 overall. This thing says we're up 6%. And so we have put in $84,700. We started the portfolio on February 15th, 2022, and we were in the negative pretty much all the way until now. You see this going up, but that's just because I've added money, right? I've been adding money the entire time. I add about $3,000 a month. That's the goal, and sometimes I want to try to add more. Maybe sometimes I'll add less. Here is the portfolio. This is not for people to just blindly copy me, but it's simply to provide transparency into whether or not I own the stocks I'm talking about. You can see I own cloud software style stocks, have not made any sells. I've been buying. I've bought Meta recently. I bought Airbnb recently, and I have more money coming into the portfolio this week. I give buy reports and in-depth research in my newsletter, austin.substack.com, which is linked in the description below. All right, you don't see Palantir here, and you're not going to see Palantir here because I don't think the company is investable for the style of investor that I am. I'm not telling everybody to not own it. I'm not shorting the stock. I don't short stocks. It's just not the type of company that I want to be invested in. I did a video 3 weeks, maybe a month ago about Palantir and some of the risks that I thought it had. And I'm going to talk about some of those main ones today, which showed up in today's earnings report. So let's take a look. Right now it says pre-market, it's down 14%, okay? It did, I think, recover a little bit over the last month. So it looks like over the last month it's traded from 10, got all the way up to 11.45, which is a nice little gain, about 15% gain, and now it's back down to 9.80 pre-market, and it may get even worse, okay? So here's what happened. They had non-GAAP earnings per share of negative 1 cent. They missed by 4 cents. One of my concerns, I do not see a path to profitability anywhere in the near term for Palantir, and that concerns me because they're not growing that fast compared to other companies that I can invest in. Every investment decision we make is compared to other options that we have. And the simple story is, A, Palantir is extremely complex. B, I don't see a path to profitability. And C, I just think there's better options in companies I understand and that are simpler and that have a better track record. Okay, revenue of $473 million. They beat by 1.3 million, but they need to be beating by more than that with how low the expectations are for the stock to, perform well. And as they wrote this, the shares were only down 3%. For the third quarter, the company expects revenue between 474 and 475, which is way below the expectations of 500 million, and adjusted income from operations of 54 to 55 million. For fiscal year 22, so the full year, they now expect revenue between 1.9 and 1.902 billion, which is also below the 1.98, and they expect adjusted income from 341 to 343 million. So why are they coming in with this very conservative guidance compared to expectations? That's why the stock is down so much. Some thoughts on that is that government contracts, which is where most of their revenue comes from, can be unpredictable and they can get delayed. People got excited about companies like Palantir and even other defense contractors because of what appears to be a very complicated and challenging political environment with what happened with the Russian invasion of Ukraine and different things like that. I think people immediately assume that a company like Palantir, which positions itself as this provider and ally to government agencies around the world, which they are with a lot of their products, they thought that those contracts would just continue to grow and grow and grow. Okay, so here's my concern, is that the government business, which is it was most of their revenue and now is about half of their revenue in the second quarter, is only growing 13% year over year. This could have quarters where it grows a lot. It could have quarters where it doesn't grow at all. It could have quarters where it shrinks. It's very unpredictable, which is the challenge with a company like Palantir that has so few customers and such large average contracts. Those contracts take a long time to come through. And so with lumpy revenue in a company that can't be accurately predicted, a lot of investors and a lot of money just cannot go into a stock like that because of the unpredictability. And so that will put some natural pressure on the stock for as long as that exists. Could that change over time? Yes, certainly. Maybe this is a fantastic buying opportunity in Palantir and I'm missing the story here. That's totally fine, but I accept that, okay? I accept not investing in a company that I don't understand enough because it's too complicated. I hope that for whoever is invested in Palantir, it goes to the moon, up 100x. That would be amazing. I'm cheering for you if you're invested in Palantir. I just acknowledge that it's not the type of stock I want to be invested in right now. Total commercial revenue is growing nicely, plus 46% year over year, right? So that jumped from 144 million in Q2 21 to 210 million in Q2 22, and now it's almost as much as the government revenue. So that's a good thing, but I have a concern here. So their net dollar retention, which is how much their current customers spend the next year. So if you spend $100 in 2021, and then you spend $119 in 2022, that would be 119% net dollar retention for the same customer spending more. That's actually pretty weak compared to a lot of the other software as a service companies that I own. We have companies that are really, I want to see 120 plus, but I prefer to see 130 plus, okay? That's an indicator of an elite company with a great product, growing innovations, and a good sales cycle, 125, 130% plus net dollar retention rate. Okay, here is a big concern that I have with Palantir. And you could see the opposite of this in companies like Cloudflare that grew 1,300 customers or so in the quarter. They only have 304 customers. So they added 27 net new customers in Q2 2021 with total customers up 10% quarter over quarter. That just tells me there's too much room to miss a customer or two and that be a meaningful impact on their revenue. I just don't like companies that have such a small amount of customers and such large contracts. This is also concerning. So commercial customers, and we saw that commercial revenue grow to be a larger percentage of their revenue. I think that revenue growth is indicating and slowing down, and you can tell that by the shrinking commercial customer count. So they had 79 in June of 2021. Then over the next quarter, they grew that by about 35 customers. Then the next quarter, they grew that by 31 customers. So the next quarter, they grew that, they got that growth back up there, and they grew it by 37 customers. Well, this quarter, they're down to 19. They grew their commercial customer count by 19. Okay, maybe that's just a one-time thing, but that's very concerning to me. They're down almost 50% on customer count growth in the commercial sector. And so if that continues, or if they stay around 19, that means that revenue growth is going to be slower. This is the revenue trend that really concerns me. We see commercial revenue growth year over year, 28% in Q2 2021, 37%, 47%, 54%, and then 46%. Then we talk about the lack of commercial customer count growth. This is trending down. It's going to continue to trend down unless they could sign more commercial customers. So that's a concern. This would be okay if they can maintain this, except the other large part, about 50% of their revenue currently, has slowed down dramatically. And if this has happened with the government, why wouldn't the same type of thing happen with commercial is my question. Maybe I don't understand the business enough, but again, back to investing in businesses you understand. Why wouldn't this same trend happen with commercial customers? That is my concern. 66% in Q2 21, 34%, 26%, 16%, and 13%. If a deceleration in growth happened for one quarter or 2 quarters, I'm okay with that. we have now seen 4 consecutive quarters of deceleration. It was probably even more than that because this was probably deceleration too. Okay, so that's it for this video. We got a busy week. Stick around, subscribe to the channel, and like the video. It really helps me grow, and you won't miss an update if you do that. Stick around and let's invest together.